In today's lesson, we are going to look at double or two-column cash book. That's what we're going to be looking at. In today's lesson. It's called double or two-column cash book. But before we really look at this, I want to believe that we have a foundational knowledge or a good knowledge of what one-column cash book is. Because until you have a full knowledge of one-column cash book, you may not be able to appreciate two-column cash book. Two-column cash book is just an extension of one-column cash book. The only difference is just the columns that are involved. So I would recommend that if you've not gone through one-column cash book, kindly take time to look at one-column cash book so you'll be able to appreciate two-column cash book. Because there are some things I'm going to be explaining under two-column cash book that if you don't have a good knowledge of one-column cash book, you may not understand. Now, two-column cash book, we call it either two-column or double-column cash book. It's centered on number one, cash and bank are combined into one single cash book for the sake of convenience. Now, there is nothing wrong if an accountant decides to keep separate books. Like you open a cash account and you open a bank account. And then when you transact business on cash, you post it into the cash account. And then when you transact business on check, you post it into the checkbook. But it is going to be very cumbersome and highly labor intensive. So to reduce the stress involved in shuttling between these two books, there is need for you to bring them together into one single account called double or two-column cash book. And then students are fond of asking, sir, why do we have two-column? Why do we call it two? Is it that the entire book is just two-column? No. The thing is that the column that is reserved for amount involved in the transaction is divided into two. It is divided into cash and it is divided into bank. Now, the second thing I want to point out here is that the cash column is for all cash receipts and payment, while the bank column is for all check received and paid into the bank. Companies cannot do with only cash. There are times when companies will want to issue a check or customers will want to pay money through check. It depends on the amount of money. You don't expect a customer to come to the company with 1 billion naira inside Ghana must go. A bag of maybe 5 million or 10 million is going to be very risky. So at that point, what the customer needs to do is just to write a check to that effect. So when transactions are carried out on check, then there is need for us to open an account called a bank account. And why we call it bank account is because bank is the only financial institution that have the qualification to transact business with check. If you take check out of the bank, the check is useless because there is no other institution licensed to accept or pay check. That's why in the account, you put a column called the bank column. Now, let's make progress. There is a transaction that is called the Contra Entries. The Contra Entries. This is where I advise students to pay undivided attention because the examiner will always want to find out the strength of the student on this concept under double entry, double or two-column cash book. What is Contra Entry? There are times when you will go to the bank to take money for office use. And there are times when you will take money from the office to deposit it in a bank. So I simply put that these are made in the cash book when cash is deposited into the bank account out of the cash in hand, or when cash is withdrawn from the bank for office use. Now look at the interconnectivity between the money that is deposited into the bank and the money that is withdrawn from the bank for office use is what we call contra entries. Let me say that again. I said the interconnectivity. There is a connection between when money is taken from the office to the bank and when money is received from the bank into the office. Let's look at them individually. Cash paid into the bank. Let's look at when cash is paid into the bank. When there is surplus of cash in hand, the firm can pay it into the bank. Money will leave the cash and it will be deposited into the bank. It is very, very wrong, very, very unwise, and it is not professional enough for companies to keep surplus money in the company because of maybe because of risks, armed robber and all of that. The armed robber can break into the company and then they can go away with the company money. So if the company should come up with a policy that will regulate the amount of money that should be with the company. Some company can say we don't want to keep cash more than ₦1 million in the company. Some can say we don't want to keep cash more than 500,000 in the company, depending on the policy of the company. But the fundamental truth is that when the policy has been agreed upon, if the policy is 500,000 should be in the company, once we get 600,000, the 100,000 extra will be taken to the bank. So now when that money goes out of the company into the bank, the accountant or the cashier is expected to credit the cash book that 100,000 has been taken to the bank. Meanwhile, in the bank column, you should also indicate that bank has received 100,000. So when this is done, the effect is that the cash will decrease while bank balance will do what? Increase. Now, there's what we call accounting entries. When this is done, professionally, you are going to post it in the account. And the posting will look like you debit the amount in bank column with cash as a particular, and you credit the same amount in the cash column with bank as particular, and then you enter letter C in folio column to represent contra entry. As we make progress, I am going to show you how this can be achieved on the 2-column cash book. But let's quickly look at the second scenario where we withdraw money from the bank. I have explained how money can be taken to the bank. Now let me explain how money can be taken from the bank. Now when cash is withdrawn from the bank, at this point, we have agreed that we are still working with our policy of 500,000. We have agreed that in this company, what we should keep, the maximum amount of money we should keep, it should be what? 500,000. But at this point, what we are having is 200,000. And there are some other office procedures, other things we need to attend to in the office that we need cash. So what are we going to do? We need to go to the bank to withdraw 300,000. By the time you go to the bank to withdraw 300,000, what will happen is that at that point, that money will be taken to the office or will be taken to the company to add up to the existing money you have. At that point, the cash that we have at hand will increase, while the bank balance will do what? Will decrease. So I said, when there is limited or no sufficient cash for office procedures, cash can be withdrawn from the bank for office use. The effect is that bank balance will decrease while cash balance will increase. Now the accounting entry, this is a direct opposite of the first instance. At this point, you debit amount in cash column with bank as particular and credit the same amount in bank column with cash as particular. And then you write the letter C in the folio column to represent contra entry. Any accountant that see that C will know that that transaction is contra. Students will ask, how do we really differentiate these two transactions? They are very simple. Or what is the essence? Why are we emphasizing on this? The essence is, the accountant need to give a reliable account of the cash that is taken to the bank and the amount of money taken from the bank for office use. As you are doing this, the banker is also doing their own. So if you don't keep that record, at the end of the period, if the banker will send you statement of financial position or your bank statement, it will not tally with what you are doing. And if it doesn't, then there will be need for reconciliation. So, but that's another topic on its own. Now, let's look at what we call overdraft. If we go to the bank to take money when we are having limited cash, then there is need to also understand the concept of overdraft. What is overdraft? The bank account can be overdrawn. The customer can take more than what he has in the bank to meet urgent needs. This is referred to as granting of an overdraft to the customer. If I am the manager of a particular company, and then for some reason one of my staff run up to me and say, please sir, I might just lost my father and I want to take the corpse to the mortuary and I don't have money. Please, can I get 1 million naira, or can I get 500,000 to achieve that? And what I have in my account, the account of the company, is not up to 1 million. I can approach the bank and say, please, I have an urgent need to attend to. Please, can I be given an overdraft? That permission the bank will give you to be able to withdraw an amount of money that is more than what you have in a bank in your account is what we call an overdraft. And there is a clause to this permission. That permission can only be given to a current account holder. If you are not operating a current account, if it is savings or fixed deposit, you cannot be given such a grant. So that grant is basically for businessmen and women who are operating current account. Students are fond of, there is no point bothering yourself to be putting plenty money now. If I have 10,000, I need 20,000, I can just go to the bank and say I need overdraft. No, that's not what we are saying. We are actually saying that grant is only given to businessmen and women, and it has to be urgent with some objective evidence. The bank will want to see how urgent it is, and you must be credit worthy for them to grant you this. Now, when this is done, the bank balance will be on the credit side. What do I mean? When you are preparing your account, the side of payment will be higher than the side of receipt. That is the side where you have made payment will be higher than the side of, because if you have received 500,000 within a period and there is need to pay 1 million naira within a period, the payment side will be 1 million while the receipt side will be 500,000. So the difference now is what we call the credit balance. So the credit balance will now be on the debit side. And then the accounting entry is that for every grant by the bank, whether it is loan or it's an overdraft, it is called a liability. Liability is simply the claim of outsiders over your business. So the bank have a claim of 500,000 over the business. Now, we are going to illustrate this with some questions from our exam guide. But before then, let me just give you a sketch of how it looks like before we go to our exam guide to really give more explanation. Now, let's assume that I'm still writing in our company, ABC Limited. 2-column cash book. Just write 2 or double column cash book. You can call it cash book or cash account. Let's call it cash account. This is how it is. And then don't forget the line that demarcates the debit side from the credit side. This is your debit side and this is your what? Credit side. This line is very important. It demarcates what you receive from what is paid. Now, the first column is date. The second column is what? Particulars. The third column is what? Please permit me to write only F because of space. Is folio. Why? This is the amount column. If you are doing single column or what we call 1 column cash book, this is meant to be for amount. But since you are combining bank and cash, you are going to divide it into 2. The first one is going to be cash, and then the second one is going to be what? Bank. So that will be it. And then the same process will be repeated here. You have your date, you have your particulars, you have your folio, and then you have your cash, and you have your bank. So this is how it goes. This is how it goes. Now, let me use a very simple illustration to now explain what I mean by contra entry. This is how it is. So you have your Naira sign here because this is where you write the amount of money involved in the transaction. So what do we need to do at this point? If I say deposit, if I say 10th of February 2023, deposit 500 Naira cash into the bank. And then 20th of February 2023, withdrew 10,000 cash from the bank for office use. This is they are typical examples of how contra entry should be posted or addressed. But then let me explain something. You know, students find it very difficult to differentiate between contra entry and what we call drawings. What we call what? Drawings. The difference between drawing, because drawings has to do with going to the bank also to cash out, to withdraw money for personal use. If I own a business, I am the proprietor of my business. I'm the manager, the director of my business. And I need 10,000 Naira to fix my personal need. I don't need to consult anybody. I can just go to the bank and then get the 10,000. That 10,000 Naira that I have gone to the bank to take, it has nothing to do with the business. So because it is not improving the business, it's not going to expand the business, does not have any positive relationship with the business, that 10,000 Naira cannot come into the account as double entry, as contra entry. Rather, it will come as what we call drawings. So students are fond of making the mistake of posting drawings transactions as double entry. But in this lesson, you are going to appreciate the difference between drawings and what? Contra entry. Now let's look at the first transaction here. On the 10th of February 2023, deposit 500 Naira cash into the bank. We are going to put this money into the bank. We have excess of money and we are removing 500 Naira from it. What do I do? You come here, write 10th of February 2023. What are we going to do? We are going to deposit money into the bank. That means bank is receiving 500 Naira from us. Who is giving bank this money? Cash. So the particular here is going to be what? Cash. Cash is the one that is going to give this money to the bank. So who is receiving the money? Bank. So you put your 500 Naira here. You don't end there. I said that this is going to be differentiated from other transactions with a letter C. This C means that this same transaction will also be recorded here, because the accountant will not take the risk of writing what has been received or what has been deposited in the bank without indicating the fact that this same money went out of what? Cash. So you come here and then the same date, 10th of 2023. What did we do? We removed money we had in the company and we deposited it into the bank. Who did we give this money to? We gave it to the bank. So who gave us this money? Cash. So you write 500 here and then you put your C there. You have completed the first transaction. That is what we call contra entry. So the interconnectivity between what you have received and what you have given rather, is what we call contra entry. Please, examiners are fond of writing this contra as contracts. They will write something like this in options. And students will be in a hurry to put, anytime you see contract or you see contract, the right spelling is C-O-N-T-R-A, contra. That's the right spelling. Contra entry, not not contract or contact. They will, sometimes examiner will write contact, some other thing write contract, but the right spelling is what? C-O-N-T-R-A, contra entry. That's the first transaction. Now the second transaction here is 20th February 2023. We drew 10,000 cash from the bank. At this point, we have gone to the bank to withdraw 10,000. So you come here, that's 20th. On the 20th of February 2023, what did we do? We went to the bank to do what? To withdraw money. So who gave us that money? Bank. Bank gave us. Who did bank give the money? The bank gave the money to what? To cash. And I said you shouldn't end there, that you should indicate your C, letter C, to show that it's contra entry. And at the same time, your 20th of February 2023. What happened? We took money. Okay, we went to the bank to take money. So what happened? Who gave us that money? Bank. From the bank. Who gave us that money? Bank. So you write, this is bank. We received this money from the bank. And now who gave us that money? Cash. So here you write cash, and then you write the 10,000 under bank. So that is how it should be posted. So at this point you have completed, and then you are C. You have completed your double and your contra entry. Please, students should not forget that the only essence of bringing cash and bank under one single cash is just for convenience. And then the only part of this transaction that usually gives students headache is a contra entry, which I have explained so far. And students should not also forget the difference between this transaction and drawings. If you see now, this one, we deposit this cash into the bank, and then this one, this money was taken from the bank for office use, or you can call it business use. Whenever this money is taken from the bank for personal use, it is called drawings. Okay, so let's quickly go to our exam guide to get some more questions that will help us understand this. Now, if you look at this, by the time you click on the exam guide, you see options. Our area of interest is accounting. That's why account is already choosing there. We have already highlighted accounting. And then when you come to the year, don't choose a particular year, just to take random. The system will arrange all the questions that are related to what you are doing, and then the questions will go. Then you go to get started. When you click on get started, you see the questions will be coming. Now they said, and the account that shows both the cash and bank transaction of an enterprise is dash. A, appropriation account, trading account, profit or loss account is what? Is the cash book. Remember, cash book is divided into what? 1 column, 2 column, 3 column, and the what? Petty cash book. So what we are looking at now is 2 columns. So cash book is the answer. No, the option is what? Is D. Let's look at the next question. When the letter C is written in front of an entry in the folio column of a cash book, it shows a dash. A, double entry, cash entry, contra entry, and the what? D is journal entry. The answer is what? Is contra entry. Then the next one. The entries for cash from the bank by a proprietor for private use is, I've explained that. First of all, that is called drawings. So when you go to the bank to withdraw, you have already taken money from the bank for personal use. So the 2 accounts that will be affected, they are what? Drawings and what? And bank. These are the 2 accounts involved. So they say you should do what? Debit. You should debit what? You are going to debit drawings and you are going to credit bank, because bank is the one receiving, and then drawings is the one receiving, and bank is the one giving. So you are going to debit drawings and the word credit bank. Credit. So any option that has this is the answer. Let's look at it. The first one, debit cash and credit bank, that's no. Debit bank account, and that's no. Then the answer is what? C, debit drawings and the word credit bank. All right, so far we have been able to define what double column or two column cash book is. We've been able to explain the two transactions that make up to contra entry, which is when money is deposited into the bank and then when money is withdrawn from the bank. And we've been able to explain the concept of overdraft, when the bank gave you the permission to take more than what you have in your account. And then we've been able to explain what drawing, the difference between drawing and contra entry. And we also explained the need for the C in contra entry. And we have looked at few questions under our exam guide.